thing I want to talk about is what understanding what your higher time frames and bringing that into what your lower time frames to properly what execute on. So let's go to the 5 minutes. So just a quick review. So let's scrub back a little bit. What do we find here? Resting here. You can see this is relative what's equal lows, and just what's the time right here? This is 1:50 a.m. so this is London's low right here. So we did what? We swept what? London's low in this trade. Swept London's low. So came back all the way up from the market structure shifts to the upside, then started walking all the way to the upside. But now let's assume you weren't in this trade at all. So you saw this displacements all the way back inside of this breaker here. So now you're looking to do what? Get in the markets in this trade. So one could be a 5-minute trader and just buy as soon as we drop inside of the breaker and set stops a little bit below the breaker right there and anticipate what? Higher prices. Or you could be like me, which is I love analyzing on what higher time frame. I'm dropping back to the what 1 minute to look for my entry models. So we have our 5-minute breaker. We dropped into that there. So yeah, what would be our entry model? Majority of people usually look for what? Inversion levels, which is your something like this single pass up, single pass down, then that will be like this. Inversion fair value gap, and that will be your entry. That will be your entry right there, based off that inversion fair value gap. That's some people's model for entry. Some it's your breaker entry, which is your low, high, lower low, then market structure shift to the upside, then fair value gap entry. That could be your model. Or professionals, your what? Order block entry. So order block entry, as soon as you trade to the high of the other block, as soon as you trade to the high of the other block, and that could be your entry. Or you could get to what? Mean threshold for your entry also right there, and this could be your entry model, and you ride it all the way to this 15 minutes CB sitting right here. Or you could wait for this 5 minutes entry one more time, or your low, high, lower low, then displacement to the upside, unicorn model, and take it towards what? This premium CB, and also your needy opening gap, consequence encroachment, and not even anticipate for this buy side to get taken, because this is so much back and forth. So this is basically like a balanced price range. Also nesting where right at your needy opening gap. So I was anticipating that we most likely won't reach towards the upside, because what's sitting right here, your needy opening gap. So that already is a draw on liquidity, and if you see this so much back and forth, most likely price would to take a lot of work before price can do what? Take it out. And if you look to the right, you see we did not actually take it out. We didn't take it out. Yep. Just come back to the breaker until what? CPI still didn't take it out. We just walked those levels, then dump all the way to the downside one more time. So that shows you that area is what? A balanced price range. So your understanding of price has to reach a certain level to be able to understand draws on liquidity, because this right here, this CP is a very good partial. If you entered here, or if you entered here, this is a partial, or targeting what? Consequence encroachment, that's a partial also. So we don't need to get to these smooth eyes right here to be profitable. You don't need these smooth eyes to be profitable. This is just a draw on liquidity, and where is it nesting? Inside of a what? A needy opening gap. So that makes it what? A high probability trade. And you can see when this setup, when we started this dump, 1150, dump all the way down to what? The breaker, buying at the breaker, ran all the way to the upside, then launch, consolidate one more time, consolidate for a while, entered another macro one more time here, entered another macro, created this low, engineered what? We engineered sell side. So we created these lows, engineering sell side, then macro close. Then what do? Swept those sell side, dropping into that 5 minutes BC. What do? Start to reject off it, and creates a fair value gap entry, then your exits right there. So this is how you frame trades from a higher time frame to a lower time frame. So you are waiting for significant things in the market, which is one, your macro time, which it can tell you what high probability will show, give you high probability setups, identifying liquidity pools. One, smooth equal highs, which is one. Also, if you see smooth equal highs like this resting, and the needy opening gap is just resting either above it or around it, that also is what? A draw on liquidity, and that is a high probability draw on liquidity. And once you see us start creating a setup inside of a macro, most likely you should start looking for either your fair value gap entry, your breaker block entry, your order block entry, your inversion fair value gap entry, whatever entry that suits your trading personnel entries all the way, and start looking to target that level. I hope you all enjoyed this video and find it insightful. Until next time, be safe.